The stock market has recently gone through a major correction, with the Nasdaq being down over 15% and the S&P 500 being down about 10%, which is in the correction territory. Now, it presents a lot of opportunities to buy into stocks that fell way too much relative to what numbers they're putting up. And today I'm going to show you 3 stocks to buy ASAP. Of course, do your due diligence, because I'm just gonna quickly cover them. If you want me to go deeper, I can also make a video on the single stock that you'd want me to cover. But the stocks that I'm buying have fallen over 30%, to say the least. One stock has fallen over 50% from the peak to trough, which is quite a lot, but it presents a great opportunity for you to buy in and have a 2x once the stock reaches the all-time high, which has been fully justified in my opinion. It's just happened too fast. So the first stock is obviously going to be Hims & Hers. It is a growing telehealth company that's putting up growth rates of over 65% with increasing cash flow margins and operating margins remaining relatively steady, with marketing going down as a percentage of revenues, which is great considering the fact that the Hers side, the female side of the business, is growing over 100% year over year, while Hims is growing at about 10%, which will be reaccelerated by them introducing new products such as low testosterone therapy and even more products for women, including menopause treatment. While you could say that the main reason the stock has fallen is because of the GLP-1s shortage being really resolved and them not being able to produce GLP-1s ordinarily without any tweaks or adjustments, but that's an overreaction of Wall Street, which is pretty standard. It trades at a price to sales of about 3 times, which is not that much considering their growth rates, and then they have a PEG ratio of literally lower than 1. Their PEG ratio is 0.89, which is below 1, meaning that the company is undervalued based on the sheer growth rates to the EPS or PE value that they're at right now. I think it's a strong buy, especially in the long term, considering what management has done and how quick management is to adapt to any new changes or requirements imposed by any administrations or the government, really. Either way, the next company is going to be AMD, Advanced Micro Devices, which is responsible for producing SAMIs and chips. Now, considering the fact that they're putting up great data center revenues, which is the main kind of focus of the semi trade or the AI trade, while the growth rate has been slowing down, which has pushed the stock down. Long term, I believe there is not going to be a single winner in the AI space, and AMD is well positioned to actually benefit from the industry changes, one of which is inference, which is using the actual build and ready models to process and output information, which is different than solely training the models, which requires intense power, and that's where the NVIDIA GPUs come in. The most important thing in inference is power to price per unit of energy that you really want to measure, and AMD is known for being sustainable, which is cost effective, and I believe it's a buy as well, especially at those levels. Now, they have a PEG of 1.13, which is low in my opinion considering the growth rates they're putting up, and then their cash flow is known to deviate quite a lot, and so I believe that their cash flow is actually going to significantly increase. The forward price to cash flow is 27, but they have over 2x the amount of cash than they have debt, which is good, and so they shouldn't be looking to really raise much capital, which again benefits them in the long term as well as short-term reactions. The last stock that I'm gonna cover is SoFi. I still believe it's very undervalued because of future growth rates that they will be putting up. Nobody is talking about their new loan platform business, while their technology platform isn't necessarily growing. Because of the fact that SoFi is a registered bank, it also has to undergo many different regulations that do not necessarily apply to other fintechs. And so I believe that 2026 will be the year when we get a bigger client announced. But regardless of that, their member growth and the lifetime value of a customer is constantly increasing. Over 30% of the customers get a new product from SoFi in the first 30 days of switching to SoFi. Now, one could say that the valuation is stretched, but they're actually turning more into a fintech, and the loan platform business that they're constantly expanding. They had a $5 billion deal announced literally last week, is almost pure profit because of the kind of nature of the loan platform. I mean, they just get a commission from referring people or $5 billion in loans, and then they will get fees for servicing those loans, which will again be capital light, and it will pretty much be passive income. So again, with the growth rates that they're putting up as a bank, they're the fastest growing bank in America. I just think that the company is mispriced because of the fact that people price it as a normal bank rather than a fintech that is actually up and coming. So that's also a long-term great buy. Additionally, they're planning to expand even more with betting on growth rather than achieving even more profitability, and they've actually succeeded in achieving or becoming net income positive for a whole year, which also I think proves the competence of the management. And now they're just reinvesting into growth and acquiring more clients, possibly just trying to expand the member base and then getting people to convert with other products that they offer, especially with the interest rates coming down in the future, which I believe is viable since the economy is slowing quite rapidly. I think that the demand for loans is going to go up, making SoFi a potential candidate for getting the people to come to their platform because of the nature of the company and the process that one has to undergo in order to actually get a loan or register into the bank and use their financial services. Those are, in my opinion, the 3 best stocks to buy right now for the long term. Always do your due diligence before you buy in, but this was supposed to just give you a nice background, so just have fun researching.